Okay, guys, so we're going to do a live stream today, and today we're going to talk about what I found when I spent 30 minutes looking through the Q2 2018 financials for Tilray Marijuana Corp., which is the new darling of Wall Street and the IPO people and pumpers like Jim Cramer. And then also my thoughts about Tesla Motors and Elon Musk and how he was just charged with securities fraud. But before I do that on today's live stream show, I first need to do this stupid disclaimer. So, anything discussed on here is for informational and educational purposes only. That's what, no matter what I talk about with Tilray, even though my dad owns Tilray and is long Tilray and is telling me how much money he's making on Tilray all the time, even though he doesn't look at their financials, he only looks at their stock chart. He's bragging to me that he bought it a couple weeks before Cramer started pumping it. So, like I said, everything is for informational and educational purposes only. Do your own due diligence. I'm not a financial advisor. If you are a degenerate gambler and you bought Bitcoin and Bitcoin at 18,000 or 19,000, you were telling your friends you're gonna make millions of dollars very quick. If you bought Ethereum when it was way over 1,000, when it was almost $2,000 a coin, and you were telling your friends that you were gonna get rich quick, okay? Stop blaming me for this stuff, okay? Don't sign me up for Online Trading Academy for them to start annoying me with paid investment newsletters, with emails and phone calls. One of these assholes even put my name on a list, and they were calling me. This is like a $15,000 trading school. They're all over the country. They have locations in major cities. And they were calling me a couple times a month, and they still send me mail. And he signed me up on the email list. He wrote Jason Fucker on there. Okay? This guy's been harassing me for 6 years now. Okay? It's not my fault that he gambles on junior mining stocks, gambles on Bitcoin, gambles on marijuana stocks, and it's definitely not my fault that he has a very, very expensive addiction to flying down to Colombia every 4 to 6 weeks and spending over $3,000 in a week span, because he bragged to me about this when I was shortly friends with him about his addiction to Colombian hookers. Okay? Not my fault. You're not a good person, and you're an asshole. If you're going to do stuff like that and gamble on that stuff and spend money like that and then blame other people for your problems, you're not a good person. Okay, so that's why I have to put on the disclaimer, because of people like that. Okay, so let's get into the show. Okay, so one of my listeners out there, I don't know if he's a long-time listener or what, he said my stuff is niche. Okay, my stuff is not niche. Maybe I did waste my time. Maybe I did waste my time reading over 500 books on business, entrepreneurship, finance, economics. Maybe I did waste my time. But yesterday I wanted to take a look at Tilray Marijuana, because it's just been on fire. It IPO'd on the NASDAQ, for those of you not familiar, in July of 2018, I think mid-July. And its symbol is TLRY. If you want to take a look at the stock chart, it is up. I'm pulling up Yahoo Finance right now on this live stream. It is up 525% since its IPO. An enormous amount. It was actually up a lot more than that. Got as high as $214 on September 19th before it had a crash, and it started to rebound. But Jim Cramer was pumping it. A lot of people were pumping it. And I wanted to take a look at it for you guys, and just because obviously I think I have some skills where I can actually, besides just talking about the gold and silver markets, I was a value investor before I ever found gold and silver, and I wanted to go in and look at the financials and see, if this company was halfway decent. So I spent 30 minutes yesterday going through the Q2 2018 financials for Tilray. And Tilray is not an accounting fraud, but I'm going to bring up the highlights that I think management is inept. And despite management being inept and has a track record of not running a sound business, it's not really a business at all. It's a money-losing venture that just sucks in capital right now. And it actually had something even more rare than that. But it's not an accounting fraud, at least not yet. Okay, so let me just talk really quick. I'm going to go to my Facebook, Wall Street for Main Street Facebook group, and I wrote some really interesting comments down there, jotted the notes down about the stuff I saw in Tilray's Q2 2018 financials. First of all, Tilray, and this is one of the reasons why the stock may have rebounded, they recently reported that they had a big revenue increase. So they made almost $10 million in the quarter. Their revenue's up 95.2% compared to the second quarter of last year. However, if you look at the earnings and the amount of losses management had, to grow their revenues, they did it very inefficiently. So Tilray is a hype machine, okay? And I'm going to outline why for you guys right now. And why I think, and this is not financial advice, stupid disclaimer, that trading options on Tilray with puts and calls, there's going to be a lot of volatility in the stock. So if you're more experienced, there's going to be an opportunity to trade volatility both up and down with Tilray. Okay, so let me go through my analysis of the financials. Some of you guys are going to be shocked. Okay, so Tilray, at the end of 2017, they had $5 million in negative equity. So for those of you who are not familiar what that means they had more liabilities. The company had publicly stated on their balance sheet they had more liabilities than they had assets. Okay, that is very rare. You have to be a certain kind of fuck up to have that. Okay, you have to be like trying to screw up. And then they raised more money. Then they were able to keep raising all this money. I think these private equity guys in Canada, the money just came in and saw that, they're throwing money at people saying, hey, you know what? You have a marijuana name. You know what? You own a couple different marijuana things. You own a couple different marijuana dispensaries. We're going to give you some money because there's marijuana in your name and we can ride this bubble up and we're going to dump you on the shareholders. So Tilray, at the end of 2017, this is from their own financial statements, had $5 million in negative equity. That is very rare, okay? Almost never see that. Normally, a company is leveraged on their balance sheet, and in order to buy more assets, they've over-leveraged their balance sheet. Their debt-to-equity ratio is not good. Their debt-to-cash flow ratio is not good. No, Tilray is even worse than that, okay? So not accounting fraud, but big, big red flags. Now, Tilray has actually never been profitable in the company's history. Okay, so my analysis was that Tilray is not growing efficiently at all. So looking at their annual income statements from 2016 and 17, their SG&A, selling, general, and administrative expenses about doubled in only a year's time as they increased annual revenues from $12 million per year in 2016 to $20 million per year in 2017. And annual operating losses increased a bit as they grew their revenue. So what this tells me, as someone who looks at a lot of companies, knows how to read financial statements pretty well, I don't have a master's degree in accounting like Dave Kranzler or some other hedge fund managers might, but I'm pretty good at reading financial statements. But what this tells me, the snapshot of the company's financials, is this management team can grow revenues, but they cannot do it efficiently. They cannot do it profitably, grow revenues. They are really, really screwing up at scaling the business. And it's been this way for a long time. It's been this way for years. So more analysis here. I'm skimming through my comments here. I have a lot of comments here, so it's going to take some time to read through these. So from their newest Q2 2018 quarterly report, and this is some disclosures here. The company's objective is to have sufficient liquidity to meet its liabilities when due. The company monitors its cash balances and cash flows generated from operations to meet its requirements. As of June 30th, 2018 and the end of 2017, the most significant financial liabilities are a new company that they started with a large debt facility, a lot of long-term debt, and accounts payable and accrued liabilities. And so Tilray's valuation, guys, if you value Tilray on their 2017 annual revenues, they're a little over 611.5 times annual revenues. If you value them on the revenue numbers that they just released, they're still over 300 times revenues. No earnings. Company's never been profitable, just revenues. So if you value Tilray on the revenue number that they just hit, which by the way, they're not profitable, they're still losing money, they're growing inefficiently, they are growing revenues, but they're not doing it right. You can tell that management is not doing a good job yet. There's a lot of execution risk in the stock. The valuation of Tilray right now is, let me just go back to Yahoo really quick and I'll pull it up. Okay, so the current market cap for Tilray, it was over $12 billion last night. Oh, now it's over $13 billion, $13.289 billion. It's even higher. So guys, this is fantasy markets here. This is a bubble stock. Tilray is a bubble stock. There's no way this business should be valued that high. Now, you cannot short on valuation, though. It could go a lot higher. But I think there will be massive amounts of volatility in the stock. Like, this stock is going to have days where it goes up $20 or $30 each day. or $20 or $30 down each day. It's going to be that type of stock for a while. But from an operational standpoint, this business is not being run well. Okay? It's not like these entrepreneurs who put all their capital into Tilray and were managing efficiently, went to venture capitalists or went to investors and said, you know what, we have a small but profitable marijuana business. We want to scale and grow our business. We've proven that we have a profitable marijuana business, and we think we can scale it larger. This is not the case with Tilray. Okay? And I'm going to give you guys, first of all, if you want to go through, do your own due diligence on Tilray, take a look in their SEC filings for their Q2 2018 quarterly report. Take a look at pages 11, 24, and 25. That is where there was a lot of risks that the lawyers highlighted with big potential problems coming down the line for the business. Read those, and then see if you want to be a long-term holder of Tilray. Okay, I have to read this part here. So, general business risks and risks associated to our financial condition and operations. We have a limited operating history and a history of net losses, and we may not achieve or maintain profitability in the future. This is management and the lawyers disclosing the stuff that I'm reading, guys. We began operating in 2014 and have yet to generate a profit. We generated net losses of $7.9 million and $7.8 million for the years ended 2016 and 17, respectively, and $2.4 million and $12.8 million for the 3 months ended June 30th, 2017 and 2018, respectively. Our accumulated deficit as of June 30th, 2018 was $58.5 million. We intend to continue to expend significant funds to increase our growing capacity, invest in research and development, expand our marketing and sales operations to increase our registered patients, and meet the increased compliance requirements associated with our transition to an operation as a public company. As we continue to grow inefficiently, I just added that, we expect the aggregate amount of these expenses will also continue to grow. Our efforts to grow our business may be more costly than we expect, and we may not be able to increase our revenue enough to offset higher operating expenses. We may incur significant losses in the future for a number of reasons, including as a result of unforeseen expenses, difficulties, complications, and delays. The other risks described in this quarterly report on Form 10-Q and other unknown events. Okay, the amount of future net losses will depend in part on the growth of our future expenses and our ability to generate revenue. If we continue to incur losses in the future, the net losses and negative cash flows incurred to date, combined together with any such future losses, will have an adverse effect on our stockholders' equity and working capital. Yeah, because they actually managed to have negative equity, more liabilities than assets in the past, which is really tough to do. Together with any such future losses, will have an adverse effect on our stockholders' equity and working capital because of the numerous risks and uncertainties associated with producing cannabis products. As outlined herein, we are unable to accurately predict when or if we will be able to achieve profitability. Even if we achieve profitability in the future, we may not be able to sustain profitability in subsequent periods. If we are unable to achieve and sustain profitability, the market price of our Class 2 common stock may significantly decrease, and our ability to raise capital, expand our business, or continue our operations may be impaired. In other words, they're going to have to do another capital raise because management does not have a good track record of managing capital well and profitably growing and scaling their business. So I just said if I was managing Tilray, I would do an enormous capital raise immediately. They have a $13 billion valuation, guys. They have a bad balance sheet. They need to raise capital. Okay, I know the stockholders now won't like it. I would look at when the insiders, the venture capitalists, and other people who pumped capital into the stock can start selling and dumping those shares. I would go through that in the annual report and some of their other filings because there may be a massive share dump then in the near future. I believe that management of Tilray does not own an enormous amount of stock. I think it was a very tiny amount. I think it was only a little over 22,000 shares. That's how little of their own shares they bought. And the marijuana business is not super high margin. You have an enormous amount of risks in the marijuana business. So you have governments who want to increase taxes. Tilray's in Canada, but they're going into a bunch of other markets in other countries. So there's always a risk that the governments don't give them a license, don't give them a permit. They raise taxes, and it's high capex. So it's an agriculture business. They are going to be providing some value added and intellectual property, but the growing part of the business is agricultural, which means low margins and high capex or capital expenditures. So they do have a lot of problems. And also, guys, in the management team disclosed that the businesses that they're competing against in Tilray have more profits, more larger companies, more resources. So the disclosures were just really, really funny. And at one point last week, Tilray was worth more money than American Airlines. Pretty insane valuation for only around $10 million of quarterly revenue. But Tilray's management team disclosed, their lawyers and their management disclosed that basically they're entering this Canadian marijuana market and their competitors are a lot better than them. It was actually disclosed, I think, on page 24 or 25 of their Q2 2018, saying that they don't have the resources, they'll probably have to raise capital, they have no history of profitability, and they're competing against companies that are already much larger and already profitable. So I would not want to be a long-term buy and hold person of this stock. This stock is going to have a lot of problems. Maybe management team just had a couple bad years to start with. Maybe these guys will learn their lessons, or maybe they'll bring in new people, and maybe they will figure things out with the additional capital raise. But this current management team does not have the track record with raising money and then using it wisely. So maybe the execution risk in that stock is massive from an operational standpoint. So maybe they will prove me wrong. Maybe they will actually take their money and actually efficiently grow and make a profit, but it does not look that way at all. Okay, let me check my notes and take a swig of water. I think I covered Tilray pretty good for 16 minutes so far. Tin, I did not spend any other time looking at any of the other pot stocks. I wanted to look at Tilray because I heard lots of people talking about it, and I wanted to see what all the hype was about. I do know that I believe Canopy Growth and Aurora in Canada are actually pretty solid companies, but it looks like a lot of these other marijuana stocks are just bubble stocks, and they don't have viable businesses. I mean, Tilray just raised $167 million, which is... It's still a lot of money to me. Maybe for people on Wall Street or hedge fund managers, it's not. Or governments or central banks, it's not. But, you know, their track record with the management at Tilray, they're going to waste the money. Maybe I'll be wrong, but it looks to me like they're going to waste the money. It looks to me like this is a management team that can inefficiently grow revenues, that cannot control costs, that cannot maintain or increase margins. So this does not look like a viable business to me long term. Maybe they will bring in a new CEO. Maybe the management team that is currently there will learn their lessons. But it's a big red flag when the management team does not have a lot of shares of their own company. They're not putting their money where their mouth is, and it doesn't seem that that's the case with Tilray. When I looked up insider data, it seems that insiders do not own a lot of the stock. So Tilray is not a fraud, but management, based on the financials that have been disclosed publicly for the last couple of years before they went IPO, does look inept. Maybe that will change, but it doesn't look that way. So I would expect if you know fundamentals, if you know some technicals, you can use options for leverage. Okay, again, this is not financial advice. I don't want to hear that you watched a YouTube video and you put all your money into one trade. Okay, you're an idiot then. Please don't do that. Please don't do that. Okay, but this definitely does look like one of the worst examples of marijuana bubble stocks. I don't know if there's more. There probably is. I'm just going to assume there's probably more than this. And, you know, this is just the newest bubble in the everything bubble. There's always a new bubble being created every week or two. People are looking for a new bubble to create. And it looks like the crypto crowd in Vancouver and Canada, now that the crypto is kind of, you know, in a bear market, we'll see if there's ever a rally in that. But it looks like a lot of the pumpers in Vancouver and other parts of Canada have gone in heavily into the marijuana, pumping the shit out of it. So if I was managing money at a hedge fund, you know, I'd be looking for, this is not financial advice, just, you know, my opinion, I'd be looking for options trades on Tilray. And I would not outright short Tilray, because anytime with some of these momentum stocks and all the people who don't care, these stupid high-frequency trading computers that don't care about any of the fundamentals I just spent the last 18 minutes or so discussing, they will only buy if the chart looks good or if a press release is good. They will not look at the financials like I just did. And so they will move the stock price up in the short term because that's all they care about. So if you are going to short Tilray, you have to hedge. And I would hedge with calls. The calls will protect you. That would be like an insured hedge. And I think there's going to be massive volatility in Tilray up and down because, if there's a bad press release, the stock will drop a lot, and then they release another press release and the stock will go up. But operationally, this is not a good business. Okay, maybe things will change, but there's tremendous problems operationally at this business. The management team with a smaller company could not prove that they could run a small but profitable marijuana operation, and yet they still raised $167 million to scale an unprofitable revenue-only business. That's right now, depending on the valuation metrics, it's trading at 300 to 611. It's actually over 300 times their Q2 2018 quarterly revenues, over 300 times revenues, or if you're looking at their 2017 annual revenues, they're trading at over 611 times that. So enormous, the valuation on that's insane. But if you're going to short, you can't really short on valuation. A lot of people have gotten burned on just shorting valuation, but there's a lot of operational risk for this business. It's highlighted in the annual report and the quarterly report. They can have their permits pulled. There's so many things that could go wrong with the marijuana business. The taxes could be increased by specific governments or jurisdictions, which could destroy their margins. They could have a really profitable marijuana niche in a certain country or state in the United States or something. And then all of a sudden the taxes get jacked up 20, 30%, and then those margins get drastically compressed or squeezed, or they disappear entirely. So this is going to be Tilray raised the money. If I was the management team, I would exercise my stock options now. I would cash those out, and I would make a lot. I would start buying real estate with that money, or gold and silver with my Tilray stock if I was running Tilray, and then I would raise capital again because they need capital. They need capital now, but management has not proven that they could run that business efficiently. Hey, Matthew, I haven't looked at Australian marijuana stocks, so I can't really comment on those. It appears that the Canadian ones that are listing, either the ones that are on Canadian exchanges or Canadian ones that listed on American exchanges, are the ones that are getting the most lift, the most pump. And Jim Cramer is pumping, he was pumping the Tilray stock like crazy, and I believe, because Cramer's a pumper, but I believe he interviewed the CEO of Tilray not too long ago, and the CEO said they won't raise capital. But from looking at their financials, it looks like they need it, that they're going to be burning through it too quick because they're not making a profit. They're growing revenues, but it's not being done efficiently. It's being done very inefficiently, and the management team has a track record of inefficiently running their business. Just major red flags there. If you want to read more of my Tilray comments, they're in the Wall Street for Main Street Facebook group. I put a stock chart there with Tilray showing how the stock chart's a parabola. It's gone, I think it IPO'd at let me look, I think $23 a share. And then it went up to at one point 214. Yeah, around $20 a share it IPO'd, and it got as high. It's 251. Maybe that's diluted stock. The full screen stock chart said something different than that. Let me pull up the full screen one. Okay, well, this one says 214, and the IPO says 22 on the full screen Yahoo Finance charts, which uses Chart IQ. Chart IQ is normally good. So it had a massive spike, massive run up, but this is not a good business. Oh, Aaron, it got as high as 300. Yeah, there's a lot of really smart people on Wall Street that are shorting it, but, the whole thing is timing. And so, it becomes a battle because a lot of shorts get sued, and especially the big name public guys, when they announce they're going short, there's all this backlash to them and people try to squeeze them out. So we could see, and that brings something up too. Elon Musk said that he was doing what's best for shareholders. He was starting a stupid fight with short sellers. And that's one of the things that got him in trouble with the securities fraud. Okay, so I think we've covered Tilray enough for right now. But, guys, if I had more capital, I would actually be an options trader. So I would do a good amount of options trading. Tilray and Tesla are high volatility stocks. Both of the stocks are going to be heavily volatile, both up and down. So that type of volatility for puts and calls would be good for options traders. I think if you know fundamentals and can read balance sheets and some technicals, you can use options for leverage. So there's going to be opportunities out there. This is not financial advice. This is just my opinion. So if I had more capital, say like a hundred grand or more that I was trading, I would be using options to do that rather than buying a bunch of individual stocks. I'd be trading options for extra leverage. And I think outright shorting a stock nowadays is very risky. Some of the best hedge fund managers I know use puts. So their risk control, their losses are totally limited to whatever they bet with their puts. Whereas if you short a stock and you're wrong, like look what Mark Spiegel is a very smart guy, but he was, I think, 4 years early on his Tesla shorts. So I interviewed him about a year ago, and he laid out a great case for all the problems at Tesla. And Tesla stock kept going up and up and up and up. So, you could be right on the fundamentals, but wrong on the timing. And if you're short the stock, you're going to get killed. So timing is a big part of it. And what Mark didn't do, and he admitted he should have been long the stock and long the fraud, because Tesla is an accounting fraud, is that he should have bought calls or leaps. He should have hedged. He did not hedge his short positions. So he had massive losses. Yes, Aaron, the options prices were crazy expensive for Tilray. That's because you have a lot of professionals doing exactly what I said. You have a lot of people trading options in it, making money off the volatility now. But you don't have to pick a direction necessarily in the short term immediately for Tilray. So a lot of people are going to be making volatility trades both up and down. Yeah, the options prices are expensive, but there's going to be people who still are going to make money. Let's just put it that way. Now, if you only buy one option and bet one way, you're probably going to lose. Again, not financial advice. I have to keep mentioning this stupid disclaimer because of the guy that has an addiction flying down to Colombia every 4 to 6 weeks to go have hookers. And then he complains and bitches and cries afterwards because they don't love him. Okay, so let's move on to the next topic. I wanted to cover Elon Musk. So, yesterday, Elon Musk got charged with securities fraud. Yay! The SEC actually did their job for once. Everyone clap. Everyone clap. They actually got someone for an obvious amount of securities fraud with that tweet where he was blatantly lying and cost people who are short Tesla stock over $1 billion. They actually got somebody. I'm in shock. And apparently, Elon Musk had a deal, Tesla Motors and Elon Musk had a deal arranged. He was supposed to agree to a deal. There's a bunch of articles about this, and he did not want to be either suspended or penalized. He was going to have to take a temporary ban, I believe, and step down as Tesla CEO, and is going to be temporarily banned from being the CEO of any public or director of any publicly traded company, I think, for a couple of years because of this stuff. But now, his board of directors is filled with his brother and I believe also his cousins and other yes men who are lackeys. And so the board of directors at Tesla is complicit. I mean, they should have taken away his Twitter a long time ago based on all the crazy stuff he's saying. They should have restricted it or taken it away and had more guidelines. But, now the board of directors should also be sued because they're letting him get away with all this stuff. But, Elon said that he's not going to take the deal, and he just hired the lawyer that Mark Cuban used to represent him when he was fighting for securities fraud. But Mark Cuban, I'm not familiar with Mark Cuban's case, but Elon's is a slam dunk because he claimed that the funding, Dock of the Bay, yes men matter. Well, when you're that rich and that powerful, and you're dating like Amber Heard, and you're hobnobbing with Hollywood celebrities and other technology giants, and you have orgy parties, and you can drop acid and no one gets you in trouble at work, you're gonna think you're above the law. You're gonna think you're above the law. Aaron, that is funny. I'm not sure I agree with that, but that is funny. Elon and Trump are brothers from another mother. They tweet what they want. Yeah, I mean they do tweet a lot, but I'm not sure if they're the exact same person, but it's Elon's a con man. Tesla's committing accounting fraud. Elon did not accomplish a lot of the things he claims. He did not start Tesla Motors. He bought it from some other guy and kicked the guy out. A lot of the stuff at PayPal that he claims to have done, he didn't do. And he's been going. A lot of people are not aware of this. There's a lot of libertarians that actually like Elon Musk, especially libertarian women. It's weird, but Elon, probably just because he's rich, because he is a parasite with all the government subsidies, but. Elon has done a lot of very, very dumb things on social media. Like, he has a war. I think Lynette Lopez, a Business Insider, is suing him because Business Insider ran a story that Tesla's production numbers were way below and that they lied, and he threatened like some type of vendetta. There was a huge Twitter war, and I think there's lawsuits. Elon also doxed Montana Skeptic. If you listen to the QTR podcast, Quote the Raven, it's not a Tesla podcast, but he is a really smart short seller. And even though he's been wrong on some trades, but he has really good guests on, and he does cover a lot of the stories on Tesla. And, you know, Elon Musk, like, he needs to, publicly traded CEOs should not be doing the stuff on social media that Elon Musk is doing, okay? Publicly traded CEOs need to shut up and just focus on executing their business plan. And instead, Elon Musk is, you know, online trolling Twitter, doxing anyone who writes a good researched article about the problems at Tesla, and he's trying to ruin people's lives on social media. He should not be doing that. Okay? He's gonna pay the price for that at some point. Let me look at more of the Tesla CEO stories real quick. I'll bring a couple up to your attention. I'll attach links to these in the information section. So, Musk tore up last-minute SEC settlement, decided to fight instead. The former head of the SEC, let's see the guy's name. Pitt. Harvey Pitt. Former SEC chairman Harvey Pitt said that Tesla's in a lot of trouble. Apparently, guys, so the SEC is looking into Tesla and Elon for multiple charges. It's not just the securities fraud from the $420 per share funding secured going private tweet. There's other offenses the SEC is also looking into. Also, in the last month, it was just publicly disclosed that the Department of Justice now is also involved investigating Tesla Motors. So they've been investigating for a month, and it was just recently disclosed. So if Tesla does beat these charges, they're going to spend a lot of money, a lot of shareholder money beating these charges. And you know what, guys? But even before all this legal stuff, Tesla Motors was going to have to raise capital. So Tesla's, let me look up their stock real quick. It's $263 a share right now. It's $263 a share right now. It's down or almost 15% today alone on some of that news, but it could go down a lot more. But they released pretty decent production numbers for their Tesla, but for their, what is it, the Model 3? It's a Model 3. I mean, Elon is a pathological liar. He's promised a lot of things over the years and delivered on very few of them. Like his $35,000 car, that's not going to be true. There's a bunch of stuff that Elon has not delivered on. If you talk with good, honest Wall Street analysts who are not short the stock, they will tell you a lot of the different problems at Tesla. Christopher Whalen covered the auto industry, the banking analyst too, and he called Elon Musk P.T. Barnum. Roma Lawal. Trump is a compulsive, pathological liar. He's the loose cannon of the 21st century. He's the most consistently inconsistent yank ever. Sad. Have you ever met any American Democrats, Roma? They're even worse. They have no morals whatsoever. So it's really funny that you have the mainstream media and that you have these hardcore Democrat politicians and a lot of other regular Democrats calling Trump all these nasty names when in a lot of aspects, I mean, they're even worse than Trump. I guess you're not American, Roma, so you're not familiar with how things are, but I've lived outside of Washington, D.C. since the year 2000, and I could tell you that a lot of these Democrats that I've met are some of the most hypocritical people on planet Earth. They're willing to do anything to win. They will destroy someone's life. They will destroy their family. They will make death threats. Some of them are even willing to kill people. It is hardcore Machiavellian, ends justify the means. It is hardcore Saul Alinsky, rules for radicals, playbook tactics. Accuse your enemy of what you're doing. It is hardcore. Okay? And Democrats have won. They've been effective politically using these tactics for decades. There's actually a really, really great presentation. I found it a week or two ago, but it was over 3 hours long, so it took me a while to get through. Stefan Molyneux did it. And I don't agree with everything Stefan Molyneux says or releases, but this particular one was extraordinarily well researched. And he released this at the beginning of 2017. It was the modern parallels to McCarthyism. And so the lies that American people have learned about McCarthyism, he goes through all of them. It's crazy about how much Soviet control they had in the American government, all the spy networks, and how the mainstream media was involved, and they made McCarthy look so bad. But, McCarthy not only was he onto something, McCarthy didn't want to release names, though. So I recommend watching that presentation, especially if you're an American. It's a real eye-opener. And basically, in that presentation, a lot of people who were going to blow the whistle on the Soviet spies over the decades, the Soviets were spying starting in the 20s and 30s in the U.S. So they had infiltrated the American government a lot. They were at all levels of the American government. And so anyone who tried to blow the whistle on them, their lives pretty much got ruined. Even Joseph McCarthy and some of his friends who were reporting some of this stuff died very, very mysteriously. Aaron Hawley, Elon would give himself an A+ as CEO of Tesla. Yeah, I'm sure he would, because he would judge the stock price. But, from an operational standpoint, it's not. Remember, he said on a conference call recently, he said moats suck. And he was saying he doesn't care about answering, legitimate questions about the business and the problems and how he's going to solve them. So I don't think Elon maybe could be chairman of the board or chief creative officer if he's not in prison in a couple years for accounting fraud. But he should not be CEO of the company. He is not the CEO of the company should not be spending his time on Twitter doing all that crazy stuff. The CEO of a publicly traded company needs to not make comments like that and needs to focus on executing the business plan as best as possible. The other problem for Elon is he's running way too many companies. His time's spread too thin. He has a family. He has a bunch of kids from multiple marriages, I believe, and that he's dating celebrities. So he's doing all these things, running all these businesses, and if you saw him on the Joe Rogan podcast, he looked really tired. I mean, the guy, his body language, it looks like he's put on some weight. It looks like he's really tired. It looks like he's not really sleeping too well. And you know what? That was probably, he knew the axe was coming down after his tweet. He knew that the SEC, that was the grounds the SEC needed to really crack down on him. So we'll see how big of a penalty the SEC gives to him. It'll be very interesting. Rich Faderline, Hillary was better. Hillary was better than who? I'm definitely no fan of the Clintons. I'm friends with Charles Ortel. If you've been following my channel for years, you know that. Even though my channel is called Niche, I've covered tons of different topics. So I know a lot about business and entrepreneurship and a lot of different sectors and industries about finance and the economy. At Investing Daily, when I had a day job there, I covered a lot of different types of stocks. Small caps, large caps, dividend stocks, oil and gas. We researched and covered a lot of those different types of stocks. Okay, Rich. Yeah, I think Roma's not an American, and I think she's just repeating the stereotypes that she heard in her brainwashed mainstream media, whatever country she's from. The media in most other countries outside the United States, whether it's Australia or Europe, pretty much repeats, and Canada pretty much repeats whatever the hardcore Democrat mainstream American media repeats in a lot of instances about Trump. So a lot of people in other countries have the same views as hardcore Democrats here in the United States. And it's not accurate. I mean, I didn't vote for Trump, as you guys know, but he is doing some things right, and he has so much stuff going against him. It's crazy. It's really crazy. Did you guys watch the Kavanaugh hearing yesterday? Oh my God, that was nuts. Oof, boy. If we're going to have to go through that for every single thing, if there's going to be that level of character assassination for every single person getting appointed, if you're a Republican, there's going to be very few Republicans who are going to be willing to do that. Because basically, that ruined Kavanaugh's family, his daughters. I don't know if you guys heard this or not. I'm not sure if it was kept out of the papers, but I believe it was reported by a few media sources. But his daughters at his school, angry parents and angry other kids at the school, started to try to get in the face and threaten and assault his own daughters over this stuff. So there's violence coming. Okay, let me check my notes, get a swig of water, and I'm going to take a look, see if I covered everything, and then I'm going to answer some listener questions before this live stream is over. If you want to do more research on Tesla Motors and the problems operationally with it, Charlie Grant on the Wall Street Journal, you can follow him on Twitter. Mark B. Spiegel, he's on Twitter. He's a hedge fund manager. Although he was very early with his trade on short Tesla, he's right about all the operational problems. He just screwed up the timing of it. And let's see here, Montana Skeptic, he's back. And also QTR podcast, Christopher Irons and Quote the Raven. And there's good humor on Christopher Irons and Quote the Raven, his podcast. There's a lot of good gallows humor and sarcasm. He's truly gifted at the way he presents the information. He could probably do stand-up and make some decent money off that. Maybe a part-time gig. Okay, so Jeff, the 10-year Treasury, a couple more stories here before we wrap it up and do listener questions. So Jeff Gundlach, who's considered the bond king, Double Line Capital, earlier in the last couple weeks, the 10-year Treasury yield had started to spike, but today it looks like it's hammered back down to 3.04%. Surprise. I mean, you know, the plunge protection teams, exchange stabilization fund, whoever's involved in trying to manipulate the bond market and the treasury market, along with the stuff that Victor Sperandio outlined, because the banks basically, the incentive is now in place for the large U.S. commercial banks, both as primary dealers and also with the accounting change in the last couple years. They can buy treasuries at any price and not have to mark any losses to market. So they could just keep buying them. So the banks may have gone in when the 10-year Treasury was spiking, because earlier this week, the 10-year Treasury was starting to roll. It was starting to run. And Jeff Gundlach said that if the 10-year Treasury yield spiked above 3.25% and had a couple closes above that, that there was going to be a run on it and that a bear market was going to start. And of course, you know, some mysterious buyer comes in and look at the 10-year Treasury yield. Now it's back down. And let me look at the dollar index and the gold price really quick. Let me just go back to Yahoo Finance. Okay. Let me see here if there's any justification for the 10-year. So we are at dollar index 95.19 when we're doing this live stream on Friday, September 28th. And let's see the gold price. Gold price is below 1,200. Crude oil price is starting to move high again. Stock market is high again. And the VIX is slightly above 12 at 12.57. So, you know, some mysterious buyer decided that, hey, the dollar, sometimes, you know, the dollar and treasuries are not correlated. But, you know, someone just decided that treasuries were a good buy, even though the yield was starting to increase, which normally means a bear market. For those of you who are not familiar with how bonds react, when the yield goes up, that means that the principal value is going down in the bonds, and that means a bear market when the yields are going up. But someone came in and bought them, and we went down pretty quickly in the 10-year Treasury yield. And you know what? The initial overhead resistance, I think, was at 3.10 and 3.05, and it'll probably get knocked back down into that trading range, that trend channel, because I did some charts on this and put them in the Wall Street for Main Street Facebook group, and overall, you know, the 10-year Treasury yield has been kept in a pretty predictable trading range for a couple years now, no matter what policy the Federal Reserve has with rate hikes. And by the way, obviously the Fed hiked rates again this week, and they're planning, I think, one more rate hike this year and 3 rate increases next year. So they may, I don't know if they're doing this intentional or not, or if they're doing this intentional or not, they may end up inverting the yield curve. And that's with the inflation data from the Fed's own numbers increasing a lot the last couple years. Inflation is up a lot with the Federal Reserve's own numbers the last 3 years or so. And the stock market, I think Apple and Amazon are accounting for 30% of the move in the S&P 500, around 30%. It's only 2 stocks, just Apple and Amazon. Okay, the other major news story before we get to listener Q&A is Germany. So Germany is proposing to merge their 2 large banks. Everyone knows the problems at Deutsche Bank. but also Commerce Bank, which was leveraged, I think, over 40 to 1. They're proposing on merging the two together. Like, that would really help. I mean, the European Central Bank, via probably backdoor bailouts and covert quantitative easing from the Federal Reserve with currency swaps, is probably going to end up bailing out the whole thing anyway. Or at least buying up the bad assets of both banks, especially Deutsche Bank, because their over-the-counter derivatives position is massive. Tens of trillions of dollars in liabilities that they don't have the capital for. And Deutsche Bank was bought, they were suckered into that. They were tricked into buying that from Bankers Trust. Dave Kranzler, when he worked on Wall Street trading bonds at Goldman Sachs, he was telling me about that stuff, that everyone on Wall Street knew that Deutsche Bank had gotten suckered into that deal. Okay, well, we're to the listener Q&A. I think I've covered pretty much everything that I wanted to cover. I don't know if I delivered the level of sarcasm and jokes that I wanted to, though. I was going to really go to town on that guy who called me niche. I mean, I've read over 500 books on business investing, value investing, entrepreneurship, economics, Austrian school economics. I mean, I'm really trying hard. So for him to call me niche, that was a big slap in the face. Ugh. Okay, so on to listener questions anyway. Okay, this is from Tin, not Tim. Okay. Do you think the rest of the pot market will fall or spike after October 17th when Canada goes legal? Cheers. I think this bubble is going to go for a while longer. At least another couple months, especially in Canada. And especially the Canadian stocks that listed on an American exchange. Because these high-frequency trading computers, the pension funds and mutual funds, they want at least some marijuana exposure. But as I highlighted with Tilray, beneath the surface, beneath the stock price, there is not... substance versus style, or steak versus sizzle. I care about the steak. I don't give a crap about the sizzle. I care if it's a good steak and it tastes good. It's cooked right, it's juicy. But some people care about the sizzle. With the stock price, or as Kane said, beauty contest, that people only care about the stock price. I care also, what cares to me more as a long-term investor, although it's very difficult to be a long-term and a value investor in this environment, but when I look at a business and I look at the financials, what I care about is, from an operational standpoint, is management running the business efficiently? Are they maintaining or expanding margins? Do they have free cash flow? Do they not have to take on massive amounts of debt that could potentially bankrupt the business? Do they not have to dilute their shareholders? And do they have a pretty sound plan for growth? And can they execute the business plan and scale the business up? And over the long term, if the stock market and everything's not collapsing to total crap in 5 or 10 years, or the United States is not in a civil war because every feminazi is trying to stab men who say anything bad about women, if in the long term everything is fine, then that will bring the stock price higher, especially for a small company. So if you're a small company on the Russell 2000, like a Sandstorm, so Sandstorm Gold right now is only like, I forgot the exact share price. I can look it up real quick. Let me go to Yahoo Finance. So Sandstorm Gold is, let me scroll down, $3.73 a share right now. At $3.73 a share, if you can wait 3 years for Sandstorm Gold, even if the gold price doesn't really do that much, they're going to grow revenues. They're going to grow earnings. Their margins should be solid. So operationally, that's going to be a solid business. Again, not financial advice, but that business, because of the business model, because of the management team, because they have cash flow coming in, they don't have to dilute the shareholders really too much anymore. At least that's the plan right now. They don't have to take on crazy amounts of debt to grow the company, although they might strategically use debt with their revolving credit facility for more cash flow. But they should be able to, if they execute their business plan, to grow the business a lot. I could see, a lot more revenues, earnings, free cash flow growth from the company over the next 3 to 5 years. Over 7 years, the company might be truly massive if it's not bought out. I think I went really far off tangent there. Okay, so Travis Hornsby about marijuana stocks. Buy the rumor, sell the fact. Yeah, sounds exactly like that. But everything is very short-term oriented now with the stock market. Is very myopic. Extremely myopic. Professional money managers, hedge fund managers, institutions, It's basically on a weekly or monthly basis, even quarterly now. If you're a professional money manager, quarterly, which is only 3 months, that's considered long term. That's crazy. That's the new normal. It's scary. So institutional investors, it's what have you done for me lately? This is why value investing is not working right now. Because normally value investing, for it to work properly, takes a couple years for the market to revalue a company, to understand that they screwed up and that the company, things are really a lot better at the company than the current valuation. And so that's why value investing is not working. That's why professional money managers who are value investors, they're either out of the game and they're managing their own money at family offices, or they have enormous withdrawals like David Einhorn, or they've totally had to shut down their hedge funds like Hugh Hendry and others. But eventually value investing will come back. As more volatility comes back into stocks, those value investors will start shorting. So you will see when stocks break. And, at this point, who knows exactly when that's going to happen. But if the Federal Reserve keeps hiking rates, maybe not this year, but maybe next year, it's looking probably like next year. But sometime next year, if the Fed keeps doing more rate hikes, eventually all those higher interest rates will translate into maybe corporate bonds breaking, or one of the other economic or credit bubbles breaking. Obviously, I've laid out the case that the global economy is one giant clustercluck, and that there's over 40 asset bubbles or credit bubbles all over the global economy. And so I've said this for a couple years now, but there were people for a couple years until earlier this year with the dollar rally that were telling me the global economy was doing great. But now you're seeing the evidence the global economy is not doing great, that emerging market governments, emerging market banks, emerging market corporations were way over leveraged, and that the global economy is slowing down. And China has an enormous credit bubble. So I'm not predicting a collapse in China, but I think China will have problems. And the way they're probably going to deal with it is bailing out their banks and currency devaluations probably over the next 5 years or so. Doc of the Bay, well, thank you for commenting and thank you for sharing on Twitter. So thank you too. Ryan, what are your thoughts on Bitcoin? I have to let me pull up really quickly then the crypto. Let's take a look here. Coin market cap, let me just pull this up real quick. Since we're on a live stream, probably hear these stupid sounds, but you want my thoughts on Bitcoin, I have to take a look at the price. Bitcoin is hovering right around the cost of production, buddy. It's been fluctuating. I've said this a while ago when someone else, a month or two ago, when someone else asked me about Bitcoin, and I said it was going to hover up and down around the current marginal cost of production, and it looks to me like Bitcoin's doing that. So until we get a Bitcoin breakout above 8,000 or 9,000, maybe above 10,000, and it stays convincingly above there, the bull market's not back. So it's in a trading range, it's range bound. It looks to me like Bitcoin is hovering around the marginal cost of production. Let me look at some of the other altcoins. I know some of the other altcoins were not doing well. Vitalik was warning people about Ethereum. And this is problem for Ethereum demand, is that not all these governments, a lot of these governments, especially in the developed countries, are really cracking down on initial coin offerings. So the initial coin offerings that get through the regulation process may be safer for potential investors. However, that's going to be less demand for Ethereum because everyone and their brother was raising capital for an initial coin offering all over the world using Ethereum. So that type of demand is down, because there's just not going to be as many initial coin offerings now, especially with the ruling in the last month or so that the SEC has given on Ethereum and initial coin offerings. On initial coin offerings, not Ethereum. Yeah, the crypto markets, especially the altcoins, can be easily manipulated. So there could be temporary moves up and pumps, because on a lot of these Asian crypto exchanges, no one gets busted for wash trading. And I've explained wash trading in the past, where this is hypothetical. I've never done this. So if you're running a scheme, you and a buddy, and you bid and ask, and you keep jacking the price up and trading a coin back and forth, back and forth, back and forth. It's not a real market. You're just painting the tape and moving the price up. That's called wash trading. Okay. And so on a lot of these Asian markets, in the United States, if you got caught doing wash trading like that, you'd go to prison for it. The SEC, you're risking going to prison for painting the tape like that and wash trading. In Asian crypto markets, I don't think you go to prison for that. They haven't cracked down like in the United States markets have. Swig of water real quick. Travis Hornsby. Tips rank value Tilray at a price of $34 with 78% downside. That sounds more reasonable to me, Travis. I don't know if we're going to get there, though, because these markets are irrational. So basically, you would have to have the Tilray management team totally screw things up. You would have to have the Tilray management team, because the stock is still going up now, even with revenue growth, and the losses are the same or expanding. So Tilray's actually, if you look at their financial release from Q2 2018, they grew revenue, but it wasn't efficiently. And so their losses were actually larger, and there was a lot of other problems there. And, the market didn't seem to care. Oh, it's marijuana. I have marijuana exposure. Oh, the chart looks good, so we're buying that. Oh, they had revenue growth, even better, so we're going to be long Tilray. So the short-term oriented, myopic, rent-seeking traders, either sometimes not even human beings, or they're people like my dad who think that they can get rich quick, then they're going to buy those things. My dad doesn't listen to the podcast, unfortunately. I wish he did. My dad likes to buy high and sell higher. He's a momentum guy. And he's like, Jason, I've been buying stocks for over 30 years and making profits this way. I don't have to listen to you for anything. I know when to get out. I got out of Tesla before Elon sent that tweet. Ha 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 ha. Okay, I'm reading more of your comments. I'm going to wrap things up here in a couple minutes. $5 penny, silver and copper you should be buying. I've not looked at the copper price. Buying physical metal, not investment, just for insurance and wealth preservation. So if you want to maintain your purchasing power, or you want insurance in case there is another global financial crisis or governments start imposing even crazier laws than they are now, then fine. But if you're buying physical silver or copper for investment, not sure it's a good investment. And I've outlined this countless times for copper, that I think a lot of the copper demand, more than 50%, is from China. And their demand is artificial and it's from central planning. And China is losing money for a jobs program, make work jobs program, Keynesian ditch digging, like Franklin Delano Roosevelt did with a lot of the make work jobs programs. It's an even larger scale. And they're putting men my age or millennial men, they're giving them a job, they're moving them out of the country, and they're telling them to build roads and bridges that I don't think they're going to see an economic return on. Okay, a couple more. Hey, Kristen, are you short Tilray? I would probably have hedges, so I wouldn't do just one direction, because if they put out a good press release that they're moving into a new market, even if it's going to lose money, that stupid press release, the trading computers, trading algorithms may still move the stock price up. So again, not financial advice, stupid disclaimer. Any short positions in Tilray, I would hedge with a call. I would hedge my short positions. Again, I'm not financial advice, not trading. I'm not trading Tilray. My dad is long Tilray. I've warned him, but he doesn't seem to care. My dad was bragging how he was in Tilray before Kramer started pumping it. I seriously put my facepalm in front of him, and he was laughing at me. We'll see what happens. He doesn't hedge his long positions. He doesn't have trailing stops or anything like that. He doesn't use options to hedge his long positions. So he may end up, if he doesn't get out, he may end up giving up a lot of those gains. But he was in Tilray before Kramer started pumping it. So he's done pretty well in the short term on the beauty contest trading that stock. But unfortunately, people make trades like that, gambles like that, are called investors now. That's not investing. Hi Miro, nice to see you. Are you subscribed to my channel? Slayebag. Are some big fish attempting to collapse a few mining companies before buying in? Yeah, maybe. Maybe. You have to look at the volume. You have to see the trading volume if it's spiking there. You have to see if the company can withstand lower silver or gold prices. I mean, First Majestic Silver, I highlighted this in my video that I spent over 5 hours researching. First Majestic Silver, that acquisition, that mine that they did, the San Dimas mine, if they execute on it and the mine gets optimized and production grows on time and on budget, it's a good mine. Unfortunately, they've diluted shareholders and they've taken on a lot of extra risk, and also their costs have gone up a lot. So now First Majestic Silver was not profitable, not consistently profitable for over a year. Now they're losing even more money on this in the short term. So if the silver price went lower, First Majestic could have some issues. They may have to temporarily take on more debt or sell some other asset. So, but that's their business model. Most people are not aware of this, but their business model, and the reason Keith Neumeyer has grown that company, is they do a lot of acquisitions. But when you do a lot of acquisitions like that, all of them aren't going to work out. It's just the law of numbers. So no matter how much due diligence you do, no matter what consultants or you hire to help you out, review a deal, or experts you have on staff, that if you do a lot of acquisitions like that, not all of them are going to work out. It's just the way averages work. No matter how much work or research or people you hire, there's always, the more acquisitions you do like that, the more the odds are that one of them is not going to work out. And hopefully it's not a big enough mistake that it's going to bankrupt you or put your company at risk. But that's the business model that First Majestic does. They do a different business model than a Pan American Silver, a Coeur d'Alene. Hecla has been buying more producing mines. Coeur d'Alene tends to buy large land packages with a resource from juniors. Pan American Silver tends to do the same thing, but Pan American Silver, I think Pan American Silver is an excellent company in terms of silver mines. The problem is you can't really buy and hold a silver miner, but if you can long term and hold it for forever, but if you buy it, say at the bottom of a cycle, and you hold it for a couple of years, this is not financial advice, but I think Pan American Silver could potentially go up a lot because it's a low cost producer. They have a solid balance sheet. They have cut the dividend, which is smart in the short term, but they're promising that they will raise the dividend if silver prices go up and their margins expand. So I think that's reasonable, given the environment we're in. Now, maybe if Pan American Silver was more aggressive, they could be trying to do an acquisition here and buy up more assets. So we'll see. But it seems to me that a lot of those management teams are being conservative about acquisitions. Like I said, there's only three big name mining guys that are, besides the royalty and streaming companies, but three big mining guys that are actually being aggressive here. And that's like Ross Beatty, Rob McEwen, and Keith Neumeyer. Pretty much everyone else is being pretty conservative. The Randgold and Barrick CEO merger, I think I outlined that in my last live stream. So go watch that from a couple days ago. What do I think of Robert Miller? A quarter of mine typical cost is energy. If oil spikes to 100 before PM mining stocks drop. I've heard different estimates than a quarter. You may be right for some mining companies, but the majority of the mining industry, from all the analysts I've interviewed, spoken to, research reports, it's closer to 33%. So energy is closer to 33% of all mining costs. And especially for gold and silver, because you're moving a lot of ore. You're moving a lot of uneconomic rock to get to a tiny amount of ore. That's how bad grades are. So you're actually using even more energy now than in the past, because you're either going deeper underground or you're doing an open pit and you're moving tons and tons of uneconomic rock for only 1 gram per ton of gold, or 30 grams per ton of silver. The grades are down that much. Or 1% copper. The grades are down that much. I don't pay much attention to the daily moves of gold and silver anymore, Miro. Take a look at it, though, real quick. I'm going to Kitco, if you guys were wondering. So, gold and silver are down though, because remember I mentioned the dollar index. So the dollar index was kind of sputtering, and you heard the gold and silver pumper crowd and some of the other people trying to spin it that the dollar rally is over. The dollar rally is over. The dollar index is done with the rally. It's over, right? There have been people saying that for weeks now. And what I was saying was, no, the dollar rally is not over. It would take months for the dollar rally to sputter out if we had seen evidence that the dollar index was falling, below 95, below 94, below 93. If it got to 90 or 91 and stayed there for a while, then the dollar rally would probably be over. But now the dollar rally, the dollar index is back above 95. So let's see if it holds. That to me is why gold and silver are not as high today. Today's price. Gold is at $11.91 according to Kitco, and silver is at $14.61. So silver is starting to get a bid here compared to gold. I think there's more people realizing that the silver margins are dire and that the silver supply is starting to have some problems, because there's been big spikes in physical silver demand in India. It's very strong. And silver industrial demand has not died. That's solid too. So and the silver miners are under pressure, and the silver byproduct from copper miners, at some point, that's going to be dropped. So we'll see. David Morgan did an interesting interview on Greg Hunter, though. He said that silver is around the cost of production. So for the marginal silver producers, the higher cost silver miners, he's probably right. For the lower cost primary silver miners like the Fresnios and the Pan American Silvers, I have them still making $1 to $2 an ounce still at the current price. Maybe $3 an ounce if they can cut costs a little bit more, but probably not. It's more the $1 to $2 an ounce margin range, which is, they're not going to go bankrupt, but they're not going to make a lot of money. They're going to have probably barely enough free cash flow to maintain their maintenance capex, because mines have tons of maintenance capex requirements. But the higher cost guys are really struggling. Matthew Warmer, I'm not sure why silver's up today, but it seems that silver's rallying better than gold, which is weird. But, it's in the face of a dollar rally, so we'll see. At some point, I was saying that gold and the dollar were going to rally together as the global financial crisis worsened. It has not happened yet, but it would not surprise me if that correlation between dollar up, gold down, if that correlation changed. Because correlations in finance change a lot. Tin, as a speculative, I do like Alexco a lot long term. That's the only mining stock for a speculative position I actually have, because it's safe, it's in Canada, there's infrastructure there, and they do have very high grade silver. The costs are a little bit higher than some of the other companies, but they managed to, with their new mining plan, to reduce the cost. So I think at some point, I don't know if they're going to bring the mine online at the end of this year, beginning of next year, like they originally planned with the current silver prices, but maybe they delay that a little bit. But they've managed to keep their balance sheet pretty decent. So when the silver market does turn, I think Alexco is an interesting speculative play. Again, not financial advice, but my money is where my mouth is on that. I think that's an optionality play because of the grades there, and it's in Canada. Miro, yeah, I think the dollar rally will probably continue. I think that in the short term, at least for the next couple months, the dollar rally will continue, especially as the Federal Reserve is raising rates. If they continue on this path, if they raise rates again this year, the rest of the global the rest of the global economy, there's still around $9 trillion in negative interest rate bonds for foreign bonds. So on a relative basis, the U.S. bonds look more attractive, and that will bring in more capital. So that means more capital coming into the U.S. is good for general stocks, it's good for bonds, it's good for the dollar. So I'm not convinced the dollar rally is over. We would have to see the dollar break well below 93, probably even below 92 or 91, and stay there for a while. Okay, well, my lips are getting chapped, and getting kind of tired here of talking, so hopefully this was enough for today. I will be working on getting other interview guests on in the near future, although I'm having some technical problems now with my microphone. I think it's because of stupid Windows 10, that now my microphone, when I plug it in, and it's a good microphone, it's a $140 microphone, its Windows 10 is not recognizing it, so it takes a couple attempts to plug in and restart the computer. Stupid freaking technology. Not a fan of technology. Hey, if I had more money on this podcast, I would have a content producer. What's it called? An audio editor? No, not an audio editor. I already have an audio editor per job. What's the guy that sits in the studio with Jason Stapleton? Forgot what it's called. A producer. Okay, well, that's it for right now. Bye, guys. Hopefully you found this video, and hopefully you will understand that even though the Tilray stock price may go a lot higher, the operational business has enormous amounts of problems. And you know what? You're not going to be able to say that management and the lawyers didn't tell you so, because they outlined all this stuff in the financials. It's all highlighted in there. It's all disclosed, but almost no one reads the financials like that anymore, because all that matters is the short term. The stock price is going up or the stock price is going down. But from an operational standpoint, I would not be a long-term investor in that business. Not only are the financials bad, but management has not proven that they can operate profitably a tiny little marijuana company, and yet that because of the crazy capital markets that we're in, with asset bubbles and credit bubbles and the everything bubble that keeps coming up with new ways to create bubbles, that someone managed to raise $167 million for the Tilray company when management has proven management had negative equity. Okay, guys, there are more liabilities than assets. That is rare. You have to be some kind of screw up. Oh yeah, sarcasm, guys, in the comments section. Great. I have been trying to implement more sarcasm, but I'm not as good as Christopher Irons from Quote the Raven. He's a true master at that. Maybe it's just a Philadelphia thing, though. Although I am from New York, New Yorkers do have a lot of asshole in them. Philadelphia people and New York people are similar in that regard. Okay, guys, well, that's it for now. Bye.